All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I have something a little bit different. We're going to talk about an extra large cap stock. In fact, it's the largest market cap stock in the United States. So we're going to be talking about Apple today, stock ticker AAPL, and I want to tell you why I think that Apple is a stock that I am personally staying away from in 2023. I think Apple is going to be the stock that loses the most market cap in the entire stock market in the year 2023. So right off the bat, no, I don't think they're going out of business. I don't think this is the end of the world, but I'm going to explain to you why I think that. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, it really helps the channel out a lot. And lastly, if you want to become a member of the channel, you can join the channel by hitting the join button right next to the subscribe button on YouTube. And if you don't see a join button, there should be a link below. Members get some members-only content. We also do a once-a-week members-only live stream. And also, the members get to choose a stock once a week for me to do a deep dive video on. So you're welcome to join us there. Let's talk about Apple. Okay, so Apple's trading at $144 right now. You know, they've done so many stock splits, it's hard to even keep track of. But over the years, this stock has grown monumentally. This is now a 2.29, basically a $2.3 trillion stock. So it wasn't that long ago that there were no such thing as even a $1 trillion stock. This did get as high as very close to, if not at, $3 trillion at its peak. So I think there's a lot more room to the downside. And again, this doesn't mean I think Apple's going out of business and this is a disaster or a nightmare. It's just they have grown to be so gigantic with a market cap that is so monumentally huge that there's just a potential lot of market cap still left to be lost. I do think that the tech stocks got out of control, particularly the extra large cap tech stocks. Most of them have corrected to a point where they're down as a percentage, much more than Apple is down. I'm going to show you some articles recently. The narrative on Apple is changing out there, and for all the time that they've been out there, I've never really had this feeling before. So let's talk about a few of the things that are going on. So if I look at a chart of their market cap over the last 3 years, you're going to see this says we peaked at $2.9 trillion. I thought it got up to $3 trillion, but somewhere plus or minus of $3 trillion. The thing is, during March of 2020, when we had our world situation, this stock got under $1 trillion. Now, just barely. It got down to $999 billion. But prior to that situation, this stock was trading at about $1.3 trillion. So that made it by far the largest stock in the stock market. So it's now significantly higher than that. It's another $1 trillion higher than that, even though it is 20% off of its all-time high. So that's why I think there's maybe another, I'm going to say $500 to $700 billion of market cap that I think could go away in this stock in the year 2023. Understand, this would still leave it as one of the top companies in the United States and the world. It may still leave them as the largest market cap company in the United States. So to me, that's one of the reasons that this is not out of the realm of possibility. This is their PE over the last 12 years. So you can see this was hanging out at a 15 or 16 PE for several years. This jumped way up to about 35 in the year 2020. So even though it's pulled back a little, you'll see it's still at about 24 right now. And again, historically, that's much higher than this stock has traded. This PE ratio is not justified, in my opinion. This is maybe a 5% compound annual growth rate type of a stock at this point. So if we look at their financial statements from the year ended December 25th, 2021 to December 24th, 2022. So that's the fiscal year that just ended. Their top line was up about 6% year over year. And you can see the prior year, it went from 220 million to 297 million. So that was a massive amount of growth. So that is the reason that this stock popped up. In addition to that, their net income went from $57 billion to $94 billion. So you can see why they had this jump at one point. However, from 2021 to 2022, they were at 6% growth on the top line and 7 or 8% growth on the bottom line. Analysts are projecting next year they're going to be at 2.9% growth. And then in 2024, maybe 5.6% growth. So that will be a 3-year period where they're somewhere in the 3 or 4 or 5 or 6% growth rate. And that does not justify, in my mind, a 24 PE. That is much higher than their peers. In addition to all of that, so that's more of a fundamental and technical reason why I think there's going to be a pullback in this stock. But I want to show you some stuff that's going on with Apple right now that enhances my belief that this is a stock that may be headed in the wrong direction. Okay, these are all headlines within the last week. Apple's anti-union tactics in Atlanta were illegal, U.S. officials say. So I'm not going to read you all these articles, but my point of this is the narrative is starting to get a little bit negative around Apple, and this is a company that's had almost a cult level following, and people are very dedicated to their products, but they're doing some things that I think may change that over time. Next, Foxconn reports big sales drop after iPhone plant disruption. This is a problem for them. They're having production problems in China, which leads me to the next article. This was in Fortune magazine. The clock has struck midnight in China. Wedbush analyst Dan Ives says Apple needs a new plan after major iPhone supply chain disruptions. So you can see this is turning into a problem for them. It's turning into a problem just as far as their actual logistics of their production, manufacturing, shipping, supply chain situation. So that's a problem. There's also a lot of controversy right now about these plants that are operating in China, and they're getting some pushback on that as well. Mercado Libre files complaints against Apple for anti-competitive practices. So this is another thing that's starting to bubble up. There are a lot of companies, and this is a decent-sized company, that are complaining about Apple's fee structure in their app store. Apple takes 30% apparently fee from every single app in the store. A lot of these companies are struggling with that. It makes it a difficult equation for them to succeed. So because Apple has such a large part of the market, and they, to a certain extent, they're able to dictate this, and so they're starting to get a lot of pushback from some important people. Okay, so on that front, battle of the billionaires. Elon Musk, Mark Zuckerberg strive to break free from Tim Cook's shadow. Now, Tim Cook's the CEO of Apple. So Elon Musk recently had a big tiff with Apple. That has subsequently resolved itself, and it seems to have resolved itself in Elon Musk's favor as far as Twitter goes. It looked like Apple was moving towards taking a hard stand on Twitter once he bought it and took it private, and for whatever reason, Elon Musk and Tim Cook had a meeting, and at the end of that meeting, Apple seemed to do a very big reversal. They were taking all of their advertising off of the Twitter platform. It looks like they're putting it back on the Twitter platform, and then there was a lot of talk that maybe they were going to kick Twitter out of the App Store, and that has been put to bed. That's not happening. So I think Apple even feels the pressure for them to concede on a couple of these big issues. I think they're seeing the pressure right now that companies are expected to perform, and they need to start focusing on business, and alienating big businesses like this is not in their best interest. So Mark Zuckerberg over at Facebook, which is now Meta, has a long-standing argument going on with Apple. Their business has been massively disrupted by App Store and privacy policies. So there's a lot of very big players in the market that are pushing Apple right now. And as big as Apple is, and they are the biggest market cap in the United States, it is hard to have these other very big companies. You know, you can only battle on so many fronts. Okay, so the fun continues for Apple. Coinbase, like Elon Musk, takes issue with Apple's App Store fees. So I know a lot of you watching that are regulars on the channel, you know a lot about cryptocurrency and that world, and what they're doing to Coinbase is something that doesn't make any sense, and they are likely to reverse it. They're trying to collect fees through their App Store on gas fees, and really Coinbase doesn't get those gas fees, so it's hard for them to pay a percentage of something that they're not even really receiving. So this is yet another battle they're fighting that I think is likely to end with Apple conceding to Coinbase and doing something reasonable. So I'm not saying they're capitulating and doing things that are unreasonable and giving ground where they shouldn't. It feels like they picked a fight with everybody, and people are starting to push back, and they're having to get some more reasonable policies. So let's take a quick look at the chart. Okay, this is Apple on the 1 week time frame. So if we take a look, so Apple hit its all-time high somewhere around January of 2022. And if you look now here in early December, so it's almost a year later, they're down a little over 20%. So they have taken a hit. They were down as much as like 28% at their lows in the summer. They're down about 20% right now, so I feel like there's at least another 20% to go, and I'm going to show you a few price points that could go even beyond that. If they were get back down to this green line, and that's where they were trading at their lows of 2021, that would be about just under a 20% pullback from here. So I think that's extremely realistic, but really, I'm looking at February of 2020. Every stock in the stock market tanked in March of 2020, and then things seem to just skyrocket from there. So from the lows in March of 2020 to the highs in 2022, this stock was up 224% in the United States by market cap, back at its lows rate here. So for this to have 225% return in 2 years is, I think, a little bit of an overrun. Remember, none of this is financial advice. I'm giving you my opinion. I don't know how 2023 is going to go. Apple has amazed me before, so it's possible that they pull another rabbit out of a hat, but to me, everything looks like it's lining up. But please do your own due diligence. This is a huge company, and as always, there's risk involved in every stock. So not financial advice, please do your own due diligence. But I'm looking back to February of 2020. At that point, that was their all-time high in the history of their company. To get back to that point from here would be another 42% decrease in the price of their stock. So that would still leave them well over $1 billion. I think that would put them at like $1.4 billion. So that would still make them a gigantic company. I think there's the possibility that we get down to that number. I think this green line, maybe another 20% pullback, is more likely, but that will lose them hundreds of billions of dollars in market cap. Somewhere in the year 2023, I think Apple's going to hit a low on the year, and that's the number that I'm looking at. I think their low on the year is going to be somewhere between a 20% more likely, or potentially even as much as a 40% pullback. So I know most people assume Apple just goes up in a straight line forever, but what it has done in the last few years is go up at a rate that far exceeds anything it's ever done in the past. And the growth rate of this company is slowing down, and it's just not sustainable to be the biggest company in the world and continue to grow 20 or 30% year over year forever. So I feel like this company, to some extent, has reached a peak or maybe just a plateau. So those are the reasons that I'm thinking that Apple is something that I am going to stay away from in the year 2023. Again, this is not financial advice. I can't tell you to buy Apple or sell Apple, so you guys got to do your own due diligence. But those are my thoughts on Apple. Thanks so much for watching. If you made it this far, please remember to subscribe and smash the like button, and I will see you in the next video.